Hi, everyone. Thank you for joining the webinar today. The webinar is on Buy, Sell, Market Report for 2023. It's if you're considering your hospitality or selling your hospitality business, you want to find out what kinds of businesses have been selling here and in tune for the 2023 market activity update and outlook is what we'll be doing, the outlook for 2024. With me today is Oliver Kotelnikov. Sorry about that, Oliver.
No worries.
He's from IBA. He is the hospitality expert over at IBA. So we're always glad to have him on our webinars to give a market update. So Oliver, you want to say hi real quick?
Morning, everybody. Appreciate everybody tuning in and looking forward to the presentation.
So give you a little history about Oliver is he's actually a hospitality expert in that his family has owned restaurants in Washington. And so he's not only, in the transactions of helping members that want to sell or looking to buy, he's got practical experience. So he really understands the industry very well. I believe I heard him speaking that they've recently been expanding their hospitality coverage with adding additional folks onto their team. And just Oliver, real quick, about how many transactions has IBA done in the Northwest?
Well, we've been in business since 1975 and with upwards of 4,000 transactions completed. Yeah.
So well versed and knows the market real well. So as far as to get started here, Oliver, I think we'll start with just the summary of hospitality transactions through Q3. So what you've seen so far in 2023. So what types of businesses that have been sold? So let's go through, I think, types of businesses, what kinds of businesses are popular on the market that generating the strongest response. Mm-hmm. So what are you seeing in the hospitality industry there? And then, and what's important to get a deal done? So kind of cover what kind of activity you've been seeing here. And I guess what I'll say is the first 3 quarters of 23.
Sure, yeah. So a robust level of activity all across the board. We're seeing, activity in fine dining, quick service restaurants, casual sector such as cafes, bakeries, lots going on and with wineries, breweries, distilleries. It's really opportunity specific and location specific. If the opportunity is strong and it attracts the right buyer and is in a location that's suitable, all of those have to come together for a buyer to commit to purchasing a business, because we need to understand it's a large transaction and many boxes need to be checked. But as far as opportunities, we tend to find buyers for most anything, in hospitality is still a very popular sector.
Would you say that transactions now are relatively flat to 2022? It's been up more has been going on, it's been down. What's the market activity like?
I would say a big determining factor for businesses is distancing themselves from COVID. So the farther that we get away from the pandemic and the pandemic narrative, the stronger the activity level. So, a business will need to have recovered from COVID and return to either historical financial performance or thereabouts, or having pivoted and changed their business model. But at any rate, having left the COVID narrative behind is very important.
So safe to say that a little increase in activity because of those that couldn't sell during COVID or retire during that period have now been able to kind of normalize the business and make those decisions moving on?
Yes, so a little revenge spending. I think on the buyer side is people have been sitting on the fence and waiting to see how
Right.
that narrative is shaken out. You do have other macroeconomic factors that are continually changing and entering the fold, and impacting the level of activity. But certainly, I would say a steady increase from 2021 to 2022 to now 2023, and looking into the new year.
Getting back, sounds like we're getting back to a little bit of norm, which is good, because a year ago there was still the COVID conversation was affecting a lot of people's on what decisions to make, whether buy or sell.
Correct.
So why we're just talking a little bit about this particular portion, is there any kinds of business that are popular? I mean, you were pretty generic. It sounds like a lot of things are happening all across the board. Any particular segment that is a little bit more hotter than the other right now in hospitality?
I would say, if I were to sort of rank them a little bit, I would say fast casual, kind of quick and nimble opportunities. They can be franchised, they can be multi-location chains.
Okay.
A large lease commitment could be a deterrent. So spaces that are able to pivot quickly on sort of economic news, or no one thinks really COVID's coming back, but it did shake things up a little bit and tested the resilience of businesses. So a business model that has multiple outlets and generating revenue is a positive, and certainly a plus. Something that's scalable, something that has, I would say, important parts besides revenue and profitability are the employees, right? What kind of an employee pool do we have in place? Is it steady? Middle management is helpful if the owner is able to delegate and work on growing the business and be a business owner rather than large amount of daily hours actually working in the business. So those are some of the more important factors.
Right. Are you seeing more transitions or transactions, in full service versus QSR, or vice versa?
We've seen successful transactions in all sectors. I mean, we've seen a recent sale of a large scale operation in Ellensburg with 50 employees. We saw a sale of a bakery with or a cafe with 5 to 6 employees. We have classical diner opportunities, breweries, all of those generate interest. They're going to be probably 10 or so core questions that are going to apply really to every opportunity, and so those are like we just discussed. What has been the profitability and the revenue trend? What have you seen in terms of employees? Issues, questions of whether it's leased or an owned opportunity. So owned real estate can certainly be an asset. What has changed since COVID? Are there any positive new trends that have emerged? Because many businesses pivoted and discovered entirely new sides and used that opportunity or the crisis and sort of repurposed the crisis for future new normal. Geography is important, right? So we've seen a lot of good opportunities in smaller communities. If we're looking at, let's say, 2 things, right? Quality of earnings and quality of life, if I can use that term. It's and those questions are, what is the business generating in terms of a living for an owner operator, and then what happens outside of business hours. So if someone's attracted to a smaller coastal community where they can be 15 minutes away from the marina and they're a boater, right? That's an attractive business. That can be a lifestyle, what we call a lifestyle business, where it's really the whole package. Places like Wenatchee and Ellensburg that are close to recreational areas, skiing areas, skiing, biking. If any of those are attractive to a business owner, an entrepreneur, and their family, certainly that enters the equation and makes the opportunity more attractive, and again delivers that whole package.
So kind of following the residential trends and changes that have taken place. So let me ask you the Seattle factor, right?
Mm-hmm.
So obviously there's still some challenges down in downtown of Seattle. The outer areas are coming back and those type of things. But how is I guess how are the transactions? Are there more or less going on in Seattle right now? Are you seeing a lot that's moved to the suburbs of Seattle? Do you have more going on out in that particular area? More opportunities out there, that type of thing. How would you define the Seattle factor at this point?
And we can look at Seattle and King County, and I'd say the larger counties in the state, and the busier counties are Pierce, Snohomish, and King counties. We've seen transactions in King County and some of them on the outskirts of King County, and certainly activity in Seattle itself. Seattle, folks looking at businesses in Seattle will ask those specific questions. If we're looking at downtown, how is the foot traffic? Is there element of crime? Has that impacted revenues? Have your customers returned to those areas? So there's really not one all-encompassing blanket statement that I can make about Seattle. It is different dynamics happening in different neighborhoods and areas of Seattle.
Okay.
But it's still a busy market, and it's a densely populated area where folks want to live and work.
Okay, so it's still relatively stable.
Fairly stable, yes.
Okay.
Absolutely.
Okay. And so how's the east side of the state? I mean, a lot of people have transitioned and moved, and there's growth in new, in counties, that a lot of growth in some counties that haven't had some of that in the past prior to COVID. How are things? How are the transactions as far as in Spokane and the Southeast and et cetera over there?
Sure, yeah, and we have an office in Spokane, and have seen an uptick of activity in the eastern part of the state. I do think costs of living have quite a bit to do with that, and then this dovetails into what makes a business attractive, right? It's not just what the business is generating in revenue or profitability, or what kind of lifestyle amenities surround it, but what does it cost to live in that community, right? And if we're talking about Seattle, then that has been a fairly important factor. Cost of living has jumped significantly, prompting maybe some, we can call urban flight, right? And moving to other outlying areas in the eastern part of the state. Has certainly benefited from increased activity, both in in sales of businesses and in commercial real estate. We have listings in Northeast Washington, so Okanagan County, areas like Winthrop and Twist, Snohomish County, moving slightly the other way, Wenatchee, Ellensburg, Spokane, Tri-Cities. All of those have seen, I would say, levels of activity equal to Pierce, King, and Snohomish counties, which are traditional.
On both the buy sale, interested in selling and interested in buying. Okay.
Absolutely, yes.
Okay. So I'm sure there's a few online here that want to know what are the most important aspects of getting a deal done in 2023, and that outlook. So what's the most? What would you say are the top things that you'd like to share with the membership or the members on getting a deal done?
I would say number one, start with preparation. Recognize that selling a business is a fairly unique, nuanced transaction. It takes some time to evaluate the business, prepare it for market, understand what your business is worth, and what's impacting those factors. It could include, tailoring expectations. You may not, your idea of what the business is worth or what it was worth several years ago, it may be more, it may be less, but, doing the groundwork to really understand what it is, what your exit's going to look like, right? Understanding timeline, if we're touching on outlying areas and smaller counties, we're probably looking at 6 months to a year from listing to funding, really exiting a business. It could be faster, but we've seen that timeline. Prioritizing your exit and as owners, what's important. Certainly the exit dollars are important, but then down the list, employees can play a role, right? And who the buyer is. And while those factors are important, we're going to do the best to really put two compatible parties together. But I think oversubscribing to who the buyer is or needs to be can be a deterrent, because we may not find that exact person. And at that point, saying, it's important that I exit and I retire for maximum market value, and putting that front and center. Really preparation and meeting with professionals and learning what the process is all about and allocating a little bit of time towards that portion. So if you're exiting in 2024, right now in early 2024, between now and beginning of the year would be a good time to start having those conversations and asking the questions.
So what's the range of multiples for EBITDA that indicate value?
We're probably looking for somewhere between 2 and 4 for food and beverage retail opportunities or hospitality opportunities. It does depend on the type of business model that it is, right? So, for instance, a single location single retail location represents one level of risk and will have a certain multiple attached to it. If the business model is more diversified and you may have 5 or 6 locations, that reduces the risk and increases the multiple that someone's willing to pay for that business. But yeah, all of that is part of the evaluation and determining that based on, yeah.
Sure. And can obviously, that's a good range. It's probably somewhat of an average range. I'm sure there's factors of whether you've got a franchise brand versus non-franchise brand, et cetera, et cetera.
And reliability, right? And so, and just, what does the multiple represent? So if it's a 2x and a 2 multiple, that's a 2-year return on someone's investment, right? So, 4-year multiple represents a 25% return, right? And so the more reliable and the more consistent the business model is and has shown consistency, the more an investor buyer will be willing to pay for it based on the safety and of that investment.
Do you help sellers, and do you help those that are selling, right?
We're a sell side. IBAA is a sell side representation firm.
Yeah, correct? Yeah. So to kind of help address that EBITDA, and then on the other side of that, right, the buyer side, about what to expect. So it sounds like that expectations is somewhere between 2 and 4 on both sides. But if you're representing me as a buyer, right, I want to try and get my best price. And if you're representing me as selling, I want to try and get my best price, right? It doesn't change. It doesn't change. How do you address that reality of really narrowing down those numbers between 2 and 4%, maximizing the value and the opportunity, maximizing the value for the seller, but maximizing the opportunity for the buyer?
Yeah, so we want to deliver to our client, the seller, every dollar that the marketplace will support. So at the same time, overvaluing the business beyond what the market will bear, and beyond what is considered, customary range, will result unnecessary days on the market, and just time wasted on both sides. So we want to be realistic, and we want to be able to justify that value once we list at that price. We are going to need to justify it not only to the buyer and seller can agree to any figure out there, but also to a buyer's accountant, to a buyer's financial advisor, to their attorney, to a bank, right? So if we have an SBA financing or conventional financing, at any rate, an outside lender, they're part of that transaction, and they're going to do an independent evaluation. Now, if the buyer and the seller, or my evaluation as the sell side broker, has inflated that value, I'm not going to be able to deliver those funds to closing if they're not realistic. So it doesn't behoove us to lower the value in any, sense or form. We really do want to deliver every last penny that we can to the seller, to the extent that we can support it and justify it in the marketplace. And that would be. Go ahead.
No, I was going to say, how much of that is connecting the right buyer to the right seller? I mean, every seller has a story, right? And part of that story is also what my establishment hasn't done. In other words, what, the vision of the future as well. I mean, so, they've been in that business for ever how long, right? And they might be leaving and yet seeing opportunity yet that has not been
has not been realized. And again, being,
right.
Both parties here and being fair to both sides. Every seller and every business has a story, and every buyer has options, right? So they're not looking at just your business. They're looking at probably multiple opportunities. And, as we touched on earlier, some of the story and the emotional connection can be a powerful anchor, right? If somebody sees a business in a town that they grew up in and they want to return to it, there are going to be factors beyond the multiples and the numbers and figures that are going to be very powerful in influencing their decision, right? But at the same time, if we're outside of the range of customary and reasonable, it's very easy to stand out in their own kind of way, because the buyer and their broker are looking at other opportunities, and they're saying, well, here's, we've looked at 15, 20 businesses. Here's what the rest of them are valued at, or the range that they're at. And so here's this business that's appears to be high, right? And then they'll want to understand why, which is where, an experienced broker comes in and says, well, we've done a detailed evaluation. Here's why we came up with that value. Here's how we're looking at the value. And here's how we're justifying. Right. So you need to be able to stand behind that narrative, which is really the reason to do a detailed evaluation for a broker, is to learn all those points.
Okay. So someone who's paying in cash, right?
Mm-hmm.
What percentage of the sale price do you see paid in cash, and how often does the seller carry a note as payment?
So seller financing is a good question. We're at an economical, sort of macroeconomical time here where interest rates are high. So that's probably a little bit more prevalent. But a typical seller note could be, or typical structure, if there's a bank, a buyer, and a seller, it could be 70% of the funding is delivered by the bank, 20% down payment by the buyer, and then 10% carried by the seller for some amount of time, right? So seller financing is not always used for reasons of completing funding. Sometimes the buyer and the bank want that piece there to demonstrate the commitment of the seller, their confidence in the business, their obligations, if there are any transition training, to make sure that that everything that the buyer is purchasing is really in good faith delivered. So it can be a little bit of an insurance policy as well as a funding piece. But we do, seller financing is a common element. It's always, at the end of the day, it's It's up to the seller who they extend it to and how much, and really all those terms of the deal are up to the seller to decide. We want to look at the deal and the offer kind of in a holistic fashion to where we see all of those pieces, right? So if the deal is, for instance, if the rest of it is cash, if 90% is cash, and 10% is seller financing, that looks like an easy exit strategy. And I like the buyer. They have relevant experience. I'm confident that they'll run the business successfully and repay me, and there's some collateral, then I'm confident, right? If there's a bank involved, and now I have a financing contingency, maybe the buyer doesn't have so much experience. Maybe I have doubts about their ability to run the business. As a seller, then if I'm asking to carry part of the balance, I'm looking at that a little bit differently.
You see much, I mean, you mentioned a bank requirement where they would have a seller involved for maybe 10% or something like that. So that's, I have not heard of that very often. Does that happen often, or is that general? Is that rare?
It's not rare. It's sometimes it's bank specific. It's deal specific. It depends on what other elements are at play, but it is a fairly common piece of business sales.
Okay, that's interesting. It's a new one for me. If we've gotten a little off track, it's basically
that's okay.
We got members asking questions here, so I want to make sure we get them in.
Sure.
And the EBITDA question is always one of the most popular ones in all these whenever we do webinars and talk about buy sell. So I've always said you're not going to escape a meeting without having to answer that question.
All right, go ahead.
And I know there's a lot that goes into that because everyone just wants an easy answer. 4.5. That's what I want, right?
Yeah.
And I want to buy it at 2. But no, I understand that that's really business specific and what opportunities there are. So here's a question. How to evaluate multifunctional dine-in with 7,000 square foot event space with a commercial kitchen? So these businesses, right, that aren't your standard, right, that kind of, how do you address multiples with those?
Yeah, so just right off the bat, there really is no standard. That's how a business is different than a residential property, is that there isn't an exact comp ever. There isn't that particular business with all those elements. So there's always going to be a variance. We need to look at those elements separately. If you have a food service operation that has a catering component, well, then you're, how much of the revenue is coming from what's the revenue by category? So how much of the revenue is coming from the restaurant? How much of it is coming from catering, right? So if it's 90% restaurant and 10% catering, then that may not be a separate element, right? If you're doing half and half and you're doing lots of corporate events, you have a established client list, then we do look at that separately. Event space, are we actually generating revenue from leasing that event space to potential clients? If it's something that can be an eventuality and represents potential future earnings, then potential future earnings are different than historically verifiable earnings, right? So we have to put that into that category of, well, it may not happen, right? It may not happen. It's a nice selling point, but how do we categorize it? Does it increase the multiple? It's a positive. It's certainly a positive to have different tools at your disposal for generating revenue. It's just how much of it is verifiable and documented, and how much of it represents a real opportunity for the buyer. Right?
Okay. So what return on sales percent do buyers look for from potential acquisitions?
What return on sales percent? So are we talking about sort of what profitability margins? A typical hospitality business, a high is probably somewhere between 15 and 20% of net profitability. So if that's the question, if I'm understanding the question correctly, there is a range, and it can be as low as 10%. It can be lower, but obviously the less of your money that you're keeping, right? If you're making $1 million in sales and keeping 100,000 as profitability, that's 10%, right? So that's going to be on the lower end. If your business model is keeping 250,000 on $1 million, that's a 25% return on revenue, and that's more attractive, right? So there can be elements there that a buyer can look at it as a sort of a to-do list and a way to improve, right? So there are very experienced operators who come in and look for those areas and for those opportunities to say, well, gosh, I've got an existing infrastructure. I can improve, the office and admin costs. I can improve labor costs. I have increased buying power. I can improve cost of goods. So there is opportunity in there, but you want to be keeping somewhere in the neighborhood of 15 to 20%
Sure.
of every dollar that you bring in, if that's the question. I
No,
understand.
I think you answered that perfectly. It obviously depends on what that business is currently doing, and then
Right.
Whether there are efficiencies with the change in operation or not, right?
Absolutely.
And if you're acquiring, that means you have something and you have some history and you have some experience to be able to weigh in on that. Here's a great question. I don't get this one very often, so this is a good one. How do you weigh in or assign goodwill
Yeah.
brand in an evaluation?
Yeah, so it's a good question, and so goodwill, blue sky, right? These terms they seem ephemeral, but recognize people vote with their dollars. So goodwill actually is profitability, because if you are a reputable business and you have goodwill, presumably people frequent your business and they buy your product. If that goodwill represents, what that represents is that they just talk about you at parties and say, gosh, this is a good restaurant, but I'm not eating dinner there, then really, then it falls a little bit short of goodwill, right? Then it's just maybe a good reputation, but I would say I guess reputation and goodwill are measured in profitability. So we need to see that goodwill in the financials and to apply a multiple to that goodwill, because that's your multiplier, right? You have the revenue multiple, and then that's multiplied by your goodwill. Ultimately, that's the goodwill value is profitability times a multiple.
And what about the equation of opportunity in that?
Yeah.
In that goodwill? You see that with larger brands, right? That will come in, especially on the franchise side, right?
Right.
Yeah. But you still have some non-franchise sides out there that, again, have good reputations and good brands, and the opportunity to expand those brands. That brand.
I mean, it's a conversation piece, and ultimately, it's, can we justify it to a buyer, right? If we're trying to get money for it up front, can we build a narrative that is, right, believable, and somebody says, well, yeah, this is really a growth opportunity in the next 3 to 5 years for me. So if it's conjecture and it's our opinion, then the buyer is free to respond to that and evaluate that how they will, because until it's happened, right? So very often, we'll bring in things like earnouts, for instance, and those are meant to address potential future revenue. So if we are saying that it's going to reach, right, we're doing 2 million now, but we're saying it can reach 3.5 in 2 years, if that's the case, then we can have it in the agreements that if it reaches those volumes, then then the buyer will be happy to pay a portion of that revenue, right? So that's the way to address an uncertainty on both sides.
Okay, that's an excellent way to address it. Let's change topics and move forward a little bit. So the outlook for 2024, what do you expect if you're considering selling in the next 12 to 18 months?
Um, we're expecting good things, and we're expecting, busy activity. We do need, a little bit of help from interest rate stability. And that's a little bit more of a financing question and a banker question, but that does create some level of uncertainty and maybe takes some buyers out of the buying pool and kind of keeps them in a holding pattern. Overall, though, I wouldn't suggest anything drastically different than what we've discussed here, and focusing really on, as an owner, the best thing you can do is to continue running your business to the best of your ability and keeping the numbers strong. Right. So, if you're considering listing in 2024, rounding out the 2023 financials fairly early in the year and filing a tax return, going to market on a strong, fresh, recent tax return. I can't stress enough the importance of recent financials and recent numbers. And again, starting that conversation early with talking to brokers and deciding whether you want representation, which is highly recommended, and really who you want to be represented by in the marketplace. As an owner, you need to be comfortable with your representation, and you need to trust the broker that you're working with. So, some of that does require groundwork and time, and putting in some time to prepare. Overall, we're expecting, like I said, we're expecting a good level of activity, and so far, really nothing has prevented willing parties from coming together to make a deal, and from strong businesses finding qualified buyers.
So without holding you accountable to the crystal ball, obviously the national impact of interest rates, right, affect everybody. You seeing that at this point stabilized and we're at the peak of that, or do you see that creating more difficulty in the buy-sell relationship? What would be your forecast? Such a probably not a fair question, but what would be your forecast for 2024?
Yeah, difficulty, is, I don't see it being a difficulty. It's going to be a conversation piece. Having a relationship with a qualified SBA lender is the key for buyers. We continue to see, despite the kind of the national or the larger narrative, we continue to see deals getting funded and are doing so successfully. Rumors and murmurs, yes, it's supposed to slow down and stabilize, but we need to, I think the key is to focus on the factors that we can impact. So as a business owner, you have no control over what the interest rate will be, right? You have control over when you go to market, and you have control over what your business does and how it will appear in the marketplace. Ultimately, financing is a buyer issue and a buyer concern, and they need to deliver that to closing if they want to secure a strong opportunity. So we'll present the strong opportunity. We'll let them decide how they want to pay for it.
So I have another great question for you.
Yeah.
Does your experience indicate ghost kitchens were a COVID fad, or is it a growing trend and desire of buyers?
I don't think it's a desire of buyers. I think there is, a place for it. I think ultimately, people, hospitality is it's a philosophy of welcome, right? People want to share experiences. They want to be in a place with friends and family and celebrate occasions together, and maybe go to the same place and over for certain dates. I think there's room for ghost kitchens, and they don't necessarily take away from traditional hospitality. I don't think they're a threat. I think we'll always want to be, in a place with friends and family, and I don't think a ghost kitchen ever replaces that. It's a convenience, right, that we all need on occasion.
it's a delivery convenience.
Yeah,
Obviously, and yeah, it's hard to escape the human interaction we ultimately want to go back to, right?
we do.
You know,
Absolutely.
so
Yes.
it's yeah, it's and I would assume that's somewhat related to a city environment versus a non-city environment, right? A city environment, you might have that more so than you would in a rural area. Um, Buy, sell, hold recommendations for different types of hospitality businesses.
Yeah.
I mean, what's your recommendations as you look at these different hospitality businesses for the outlook on 24?
So I would say the best time to sell is when you're strong.
Okay.
So you want to come at it from a position of strength and be on the market when your business is doing well, when you're prepared, all the documents are in order. We have a strong sales trend. We're coming at it from a position of strength. If there's work to do, whether that's staffing or tail end of recovery from COVID, whatever the case may be, um, hey, we can certainly still position the business, but it's going to have that caveat. The best way to be on the market is just we're is at your peak.
Right.
So if there's work to do, that doesn't prevent you from doing an evaluation and learning about what the task list looks like, because you may be surprised by what's impacting your value, positively or negatively. You may be surprised by the number. If you don't know what you're likely to walk away with, I would say, uh, you know, proceed uh, proceed to some preliminary steps and then gather the information before deciding to go to market. I would say the worst thing you can do is call a broker and say, I need to be sold in 3 months. You know, that that's a tough, tough deal. And you're going to leave dollars on the table.
All right. Before we let you go, any announcements at IBA?
Yeah. We are growing.
You are growing.
We are growing. Yeah. So added sister offices in Oregon. Bend, Oregon has a new office, and we have multiple new brokers in our Bellevue and Spokane offices. So we're ready for activity. We're expecting good activity, and are prepared for it and have the bandwidth. So if anybody's interested in exploring exit avenues, please reach out.
So is that an indication that things are moving forward and growing and getting out of COVID?
Well, you said you wouldn't hold me to a crystal ball, but I just sort of
Yeah.
indirectly gave away my position on the topic.
Yeah,
So
yeah,
yeah,
you definitely did. You're very quiet about the market is, and obviously it's heated up a little bit, and your changes just pointed to that. So,
we're
uh,
bullish.
yeah, that's okay. That's okay. You're
Yeah.
conservative. That's the way to be, right? That way you do a great job. Um, and then it looks like I've noticed you've also done some hospitality. So you're finding more dedication to hospitality, I noticed, in the business. I mean, it started off, years ago with you guys as a relationship with in the hospitality industry, focused on that. But obviously it's expanding. You got more dedication going to it with the new location, more people, and website upgrades and things like that. What's the best way for someone to reach out, Oliver? You want to shout out your contact information real quick?
Yeah, you can reach me directly at Oliver at ibainc.com. Shoot me an email. You mentioned the website. Yes, the website has grown, specifically in regard to hospitality. We actually have a dedicated hospitality page that lists the opportunities that are currently available. So it's generally a fantastic resource for anybody beginning the journey of exploring the potential sale of their business. So there are lots of blog articles, um, obviously opportunities currently for sale, different topics to explore, general information on buying and selling a business. But yeah, feel free to reach out directly, and we can certainly take it from there.
So that's Oliver at ibainc.com.
.com. Yep. Yep.
Okay, so Oliver at IBA, you want to shout out your cell number or phone number to reach you?
It's 425 454 3052.
All right. I want to thank you, Oliver. I want to recommend Oliver. He's been a good friend to many members and have helped a lot of people out. As you can see that, I mean, he is an expert at, and his firm is an expert at buying and selling and helping members with what their next steps are in hospitality. So if you're looking to sell, if you're looking to buy, you should talk to Oliver. There's others out there, I'm sure, that you might want to chat with, but I would not go through the process without talking to him as well, because I mean, he knows his stuff. And so I personally like supporting Oliver because of his connection in the hospitality industry and understanding our business. So Oliver, I appreciate you. I'm glad we did this webinar. We'll get this posted out on our website. Lisa will take care of that. Thank you, Lisa. Thank you, support. Thanks for support, Raquel. I appreciate that as well. And Oliver's contact information is in the chat link for those that want to pick it up. And Oliver, I just want to thank you again.
Yeah, thank you.
We'll be doing this. It's good that we keep up on this a couple times a year so people know what's happening in the marketplace. So we do appreciate you.
I appreciate the opportunity to be a resource. Thank you.
Okay, and thank you, members, for joining. We appreciate you as well. Thank you. Bye-bye.